All right, guys, good morning, February 9th, and today we're going to be talking about OTC land again, because guess what? OTCs have been absolutely insane. Tons of opportunity yesterday. I was there for most of it. I unfortunately couldn't get my fills in E-Trade. Missed out on a couple, about 3 or 4 or 5 grand, but that's okay. That's the kind of market this is. You can miss these huge plays, and there's one right around the corner. So it's not a big deal. I think today is actually going to be even crazier than yesterday, just by how much everything ran up. There's bound to be some pretty big panics coming. So let's go into some of the charts I'm looking at. DPLS, they opened a manufacturing facility. I don't really care what the news is. Again, I say this all the time. It doesn't matter what the news is, just the fact that they have news. So they had news, and as you can see, went straight up about 200%. The buy for this would have been right here in this consolidation period. Then as breaking the 16-cent high right up here, that would have been your confirmation that the play is working. And it went straight up, had some healthy consolidation and then had another leg up. So these are those nice little, what we call the ABCD charts. You can call them a gun chart. You can call it, a triangle wedge, whatever you want to call it. These are charts you want to look for. A stock that can spike, hold its gains, consolidate near its highs, and then break out again. That's usually a very healthy chart to buy into. This panic, I wouldn't have been buying here at the open. I like to buy morning panics. But this just wasn't enough of a panic for me to buy into. Yes, it would have been a nice buy in hindsight, but for my risk reward that I like to trade, I would want a bigger panic. So moving on to HQGE. Look at this, another insanity chart. This thing went up 800% yesterday. Just 800%, no big deal. This thing offered plenty of buy opportunities yesterday. I unfortunately didn't see this on my radar until I scanned for it later in the day. So I kind of missed all this initial jump and I missed this spike. But this is okay. So I actually played this panic down here. And this is what I look for. If you miss this huge spike, it's okay. This will still offer you amazing, amazing profit opportunities. This right here, I'll just do the math for you on my chart here. This is about a 60% bounce from the bottom to the top. So you're making 60% in just a couple of minutes, as long as you can time these turns. And like I said, you got to have that level 2 information to help you time these things. And the level 2 is right down here. Learn how to use it, learn how to read it. If you don't know how to do it, I have a mentorship program. I can teach you how to read level 2. And I'm telling you, it's like taking candy from a baby. You can perfectly predict when this thing is going to reverse. And it just really gives tight risk reward. As you can tell, this is just an amazing play. And actually, if you had held, it went even higher. So myself, I would have sold right here. It would have offered another buy opportunity right here. And then you could have bought in here. And that would have offered you, if you bought at the dip and you held all the way through, that would have been 111% gain. So that would have been a really, really solid hold. I generally do not hold them for that long. I'd like to take my profits right off the table. And if anything else, maybe I'll keep a runner. I'll take 80% of it off. Take the money out of the market, and then I'll let the rest ride. And I know that might be a little boring, but I like to stay safe in any kind of market because you never know if these plays will be the 100% winners or if they'll just do their 50% bounce and then fail. So I always like to be safe. If you want to be more aggressive, then you can buy these secondary dips as you see them holding up. But you just got to make sure you have tight risk reward, especially in a stock like this, where if it does dump, you are losing 20, 30%, 40% very quickly. So you want to really pick your entries very, very carefully. Moving on to CUV. Look at this, insane, right? Another crazy chart. Again, it had the same pattern as this. Nice run up, had some consolidation, another leg up, consolidation, another leg up, then it went sideways, and then once it broke that sideways price action, you could have bought for a very good risk reward trade. And this is what I prefer to buy, are these sideways price actions where it starts to perk up past that consolidation period. That to me is a good risk reward setup. You can also buy these little consolidation dips. You just have to make sure you risk the bottom half of the previous consolidation period to have a good trade plan. Otherwise, you get shaken out quickly and you won't be sized in appropriately. WDLF, another spike that went straight up. Again, had some more choppy consolidation, and then it had more legs up. It did close weaker into the close, so we'll see what happens today. Maybe it gaps up, maybe it doesn't. I'll be watching for panic dip buys as usual. HCMC, this is another beautiful chart. And these are the two charts that you should save because these are my ideal setups that will make you the most money for the least amount of work with the least amount of stress. HQGE, HQGE, and HCMC. Look at these. They're almost identical. All the way up, and then pump. Or all the way up and then down. All the way up and then down. And then guess what? They bounce. They bounce. Let's do the math on this one. Let's see how much that percentage was. From bottom to top, 73% bounce. I mean, it's just insane. So when you have these stocks that are running 200 to 300, 400, 500, 600%, you just got to wait for those dumps. Don't chase it up here because that's what happens. This is what happens when you chase any stock. It runs up. You get all these buyers coming in. You get the FOMO gets worse. You're like, oh, no, it's going to keep going higher. And then it dies on you. And then it goes back up, you know. And the psychology of this is very simple. You have selling pressure coming in, dumping it. You have the buyers coming in, the dip buyers like me. The sellers go away. You get your spike. You have some more chasers that drive it up. You have the short sellers covering. You get the nice little pop. It is a bread and butter pattern, people. You got to learn it. And this is an example of why I say I like to sell at the top of my bounces. Notice this bounced 70%, but then it faded off all day, opposed to HQGE, which dumped, but then it held up and then it went higher. So you have to be careful because this could have been HCMC. You just never know. And this is why I like to take safe profits because no matter what, I'm constantly taking money out of the market. And if you consistently take money out of the market, guess what? Over time, you make a lot more money than hitting these little home run plays. CLUV, I talked about that. WDLF, this is another one. I think I already talked about this one as well, actually. I'm sorry. And then INKW. This had a dump in the morning that I played. I sold it up here in the 9s, and then again it dumped. So I kind of left this alone all day. But this had a nice little consolidation in the afternoon, perked up past the high of that consolidation, which was 90 cents, and then it went up. This one was, how much of a gainer was this? That was a 13% gainer, so not bad. So these are my top watches right now. There's a ton of others. SBFM, SFOR, SING, BSLP, AXSA, BFCH, IND, ASTI, MM, NFFF, AITX, CBBT, FORW, ENZC. Actually, I think I want to look at ENZC. Let's look at that real quick because that one has been paying off very nicely. Yep, again, look at this. Boom. Same kind of pattern, right? Now, why do I think today is going to be such a good day? Well, we got to look at the daily charts. So we'll go to the 1 year, 1 day chart to get the overall picture of what's happening. And you'll notice these stocks are getting very overextended at this point. So what that means is like the intraday charts I showed you where things go straight up and they come back down, these charts are bound to have a reversal day. So if you're a short seller, it's going to be looking like a real nice time to start short selling. But for dip buyers like myself, this is going to offer a lot of panics because you're going to have shorts coming in, driving the price down, and then you're going to have all these people that are buying up here at the 190s, 170s, 180s start dumping their positions, which is going to offer us some very, very nice panics today, tomorrow, and throughout the whole week, I imagine. So if we look at this one as well, let's see what this daily chart looks like. Again, a straight up spike. This was the first spike, so it could have more, but it's a scummy little penny stock. So these things generally don't stay high and running for very long. So if it has another day up, great. And again, I'm watching for some big panics. DPLS, let's take a look at this one. Let's see where we're at here. Okay, this is the first green day, so this could actually have more legs up. So this one might not have as big of a panic, but again, I'm going to keep it on watch. This is the first green day of its breakout, so this definitely could have some more legs up. This isn't quite overextended yet. So this one may not have a huge panic. Let's look at HQGE. Again, one big bar up. I imagine you could probably have another panic, especially because it's a scummy penny stock. HCMC has already consolidated most of its gains yesterday, so let's see. Yep, look at these big selling wicks. Again, I don't imagine it's going much further. It definitely could, but I would look for more of a panic dip buy on this as well. COUV. This one actually nice first green day, so as you can tell, it's consolidated. But if you look at this chart, it usually only has one big day and then kind of gives it back. Then it recovers, gives it back, kind of recovers, gives it back. So this did break out past this multi-month consolidation period. So maybe it comes up, maybe it goes up a little bit higher, but if the pattern holds, it may have a down day today. Again, I'm going to keep it on watch for some panic dip buys. WDLF. Let's take a look at you real quick. 1, 2, 3 green days. This is down. Again, this is bound for a red day. So watching this really, really closely for that down day. INKW, what do we got for you? All right, this consolidated nicely. But again, 1, 2, 3 big green days. And as you can tell, this is what I'm talking about when I see those big 3 green days. These are the red days I'm looking for on something like WDLF, where it's had 1, 2, 3 green days. And now I'm expecting some sort of reversal at some point. And then it could always bounce. So this is the first day of the INKW bounce, or I should say yesterday was. So today, it might have another leg up. If it has another leg up and it can push past this top wick at 13 cents, I mean, that's going to be a huge gain. But again, I'm going to look for some weakness, see if I can get some panic dip buys on this as well. So those are the top plays, guys. Again, I said there's plenty more out there. If you want to get all the plays I have, again, sign up for my mentorship course. I'll give you all the plays, how to trade every single one of them, more chart analysis, and everything you need to succeed in this market. So definitely hit me up if you have any questions, and have a great trading day, guys. Good luck.